Good afternoon. My name is Carla Farley, and I am your 2020 president of the Greater San Diego Association of Realtors. And again, I am just excited here today to have our special guest back with us. Before I get into who that is, I want to let you know ahead of time that any questions that you put in the questions or the chat or something like that, we'll get those questions over to him. But actually, his presentation is amazing, as usual, and he will probably answer most of those if you stick through it. But if not, those questions will get directed to him so that we can get that information back to you in the summary that comes out the following day. With that being said, the topics today on hand will be, of course, how to minimize cash outflow right now during this emergency that we're in, the EIDL loan, and obviously the Paycheck protection loan, as well as the pandemic unemployment assistance that is available to the self-employed 1099 people that are out there. Danny Fitzgerald is with the Small Business Administration, doing over 20 years of work. And I was amazed to find out that not only San Diego County, but Imperial counties and our border, on both sides of the border actually, that he covers quite a bit of territory. And so he has a lot of expertise to bring with him today. But again, let's just give a big welcome. I am excited again, bringing this information to you, making sure that we clear the air and get you the right information, because there's a lot of noise out there right now. So help me and welcome. And although he can't hear you, Danny Fitzgerald. Hi, Danny.
Hey, Carla. Thanks again. Thanks for that great introduction. I love the enthusiasm.
Thank you. It really takes a lot and time. So we are very appreciative when we can get people who are right there in the midst of the stuff to give our people the information just as it's coming. Because like I said, there's a lot of noise and I hear so much stuff back and forth that you just can't make way of it. And I'll tell you one question real quick before you get into it, so you may hit it, because I've been getting a lot of calls and a lot of text messages about people who applied for pandemic unemployment assistance before it was ready, before the system was ready to handle it. And so they got those negative responses, they got a 0 or some things like that. So what do they do now? Do they reapply? And then there's a question that says, did you apply before? They don't know how to quite answer it. So a lot of people are looking for that one out there.
Absolutely. I'll touch a bit on that. I'm not as, my EDD connections aren't the same as they are with all the other federal programs, but we will definitely talk about some pandemic unemployment assistance. I'll talk on that. In short, the answer is yes, you need to reapply. And, on exactly how that's particularly going to be handled is what you're going to want to be able to do. So, so I'll just kind of get into my presentation, kind of go over a little bit of everything here. We will talk about pandemic unemployment assistance along with the Paycheck Protection Program and the Economic Injury Disaster Loan. And then I'll touch briefly on a couple of local programs that are also coming about. So, but I do know the pandemic unemployment assistance, there's been some confusion around that. Been trying to get some good answers, but the EDD, they're a little trickier to get some answers from. So, so I think that's part of the issue here too. So, all right, so I'm going to take it away here. All right, so again, I appreciate being able to come and talk to you all as the Realtors Association. I was able to a couple weeks ago. And so again, I think it's important that I put out there that this is done on May 4th, 2020, because things tend to change rapidly, quickly, and new information is always coming about. And yes, it is May the 4th, so it is Star Wars Day. I do have Chewbacca sitting next to me, and I have a Star Wars t-shirt underneath my shirt. So got to make sure we're able to represent for things like that too. So a couple of things as what we are. As the Small Business Development Center, which is what is the organization I oversee, we are funded by the U.S. Small Business Administration, as well as the California's Governor's Office of Business and Economic Development. We are grant funded from them. I actually work for Southwestern Community College, and we actually take those grants and we sub-award them out to a number of different partners throughout the region to basically create our Small Business Development Center network. We have locations throughout the San Diego and Imperial regions. But right now, obviously, we're working all online, and we've been providing, thousands and thousands of businesses this types of assistance, both at the one-on-one level, as well as these types of group trainings. And so in addition, of course, in regular times, our expertise is broad. We do everything from financing, business planning, operations, accounting, marketing, and so forth. And towards the end, I'll touch very briefly on a little bit of preview of it. We're doing a lot of new work that'll be coming out over the next few months in terms of kind of some of the reopen, recover, adapting basically to the new normal that businesses are having to do. And so we've already started to touch bits and pieces on that in terms of cybersecurity and the like, and some of that type of work that certainly is coming about. So what is there today? Again, this is kind of fluid and always changing, but of course there have been the economic injury disaster loan, and I'll have some updates here in a little bit about that program and what's going on with it. Of course, the Paycheck Protection Program. Of course, it shut down for a period of time. It's been back open, and as of this morning, there's still another 145 billion or so that hasn't been lent out yet. So businesses can still continue to apply, and we're encouraging folks to do so. I'm sure there'll be a question about what lenders to be able to get and all of that, and I'll touch base a little bit on that too. Of course, there's also the unemployment insurance that's come about, the pandemic unemployment assistance. I'll talk a little bit about that as well. Of course, there's the sales tax deferment. That's a big deal for a lot of folks that would have that. So you can apply through the California Department of Tax and Fee Association. Of course, the income tax deadlines were sent along, and of course, some local programs as well. So a couple of things that we always have been touching on, which is really number one is stop your cash outflow. And that's to make sure that if you do have any sort of credit or situation, you've asked them for any type of deferral or anything of the like. In particular, if you have an SBA loan, and I know a number of your clients or you may have an SBA 504 loan on any type of commercial property, the SBA has said that they will defer that principal and interest for 6 months, and they will pay the lender the interest during those 6 months. So make sure you're working with your lenders on that. If you don't have an SBA loan, you have a traditional loan, certainly work with your lender on that. A lot of restructures are coming about. We're assisting a number of folks as they're having to restructure their loans as well. But certainly there's been deferrals as well. The Federal Reserve Board took the action about a month ago to issue a memorandum to all lenders to recommend that they do actually do deferred loans. Of course, like I said before, payroll tax, sales tax deferrals, income tax deferrals. And of course, we've been recommending all along for folks to work with their landlords regarding rent delays. And of course, we've helped a number of landlords that are faced with that same situation and help them get the disaster loan, because that's been very important as well. And I've even talked to folks at the city attorney's office, making sure that they know as they're talking to landlords too, that we're here to be able to provide disaster assistance for landlords as well. And that they should work with their creditors and work with us to be able to get any type of disaster assistance too. One thing that I think is super important to recognize, and I know you all in the real estate business have to deal with this all the time. There's a lot of scams that are out there. And so it's a very, very much a problem. And so what we've seen, a couple of things that we're really seeing is a lot of phishing. That people are representing themselves as part of the Small Business Administration, the U.S. Treasury, the City of San Diego, the State of California, saying, hey, we need some additional information. Please give me your social security number and the like. Understand that none of these programs will ask for that via email or via phone. What they will do is they'll tell you they need additional information and to log on to their portal. Also, make sure that you're getting anything that's from a .gov email or from the lender you specifically applied for a loan from. And make sure, if you have any questions, please reach out to the district attorney, to the Small Business Administration. You can reach out to us, the City of San Diego. We're all working on this to be able to help prevent some of the fraud. So this is something that's super important. We've been recommending from day one, and we still continue to have issues with it, where people aren't necessarily having their 2019 financials in order. It's super important. Get those in order. If you haven't applied for anything yet, or even if you have applied, still make sure you have all of these at your fingertips. Up to and including, we're recommending having a draft tax return done. I'll talk about that in a little bit, but it's really important that even if you haven't filed, and that's fine that you haven't filed, but to have a draft tax return is going to help you have all those organized, as well as having your prior tax returns as well, including your 2018, 17, 16, basically those that would apply for you and your business. As well as make sure you have your 2020 financials to date, have your bank statements for those first 3 months of the year, being able to show the revenue that you were able to receive. That's certainly going to be able to help you with everything that you're able to document, really the negative impact that this pandemic has caused on your business, because you're going to have to be able to show that. And basically you're certifying, showing that you have that type of impact, because these programs are there for businesses that are impacted. So if you're a business that hasn't been impacted, granted 97% of businesses have been impacted, but if you haven't been impacted, certainly you're not eligible for the programs because the disaster did not impact your business. So that's certainly what's important. And then last but not least, but I'll get into detail about that, the monthly payroll expenses. So the first program is the Paycheck Protection Program. This is the program that came about just over a month ago from the US federal government that was part of the CARES Act, the original stimulus package that was passed right at the tail end of March. And the program started about a week later, and it ran out of money very quickly, kind of what a number of members of Congress are calling stimulus 3.5. It was refunded for an extra $310 billion. 60 billion of that was a set aside for smaller lenders with assets under, I want to say it was $10 billion, but it might have been $1 billion. I can't remember. But basically, it helped a lot of small lenders work with smaller businesses who may not be on the radar of large lenders. And so there was a lot of concern around that basically employers with under 10, under 25 employees were not getting taken care of. And what we've seen is that's totally flipped on its head. Now we're seeing the vast majority of loans that are coming across that we're seeing are under $150,000. I've seen plenty that are under $50,000 for companies that are 1, 2, 3 employee businesses, and that's really making a big difference. We're also seeing a lot of lenders being able to work better with small businesses to be able to get them the loans that they need. And so that's what's important is, of course, this is something that's lent through a bank or another lender. There's tons and tons of lenders out there, but there are also some lenders that are saying they're SBA approved, and well, they're not. We've had that occur, and so make sure that they are. There's some great lenders that are out there that are working with even micro businesses. Two that we've had a lot of success with. One is a local nonprofit lender. Many of you have probably worked with CDC Small Business Finance. Been around for about 40 years. They're helping a ton of our local small businesses, as well as PayPal. We've had a lot of very good luck with PayPal. And both of those entities are continuing to accept new applications. So those are a couple that we're seeing. So real quick, in terms of extra things on PPP is, of course, you have to be in business prior to February 15th, 2020. A question that we've been asked is, what if I bought a business in March, but the business existed prior to February 15th? Am I eligible? The answer is yes, you are eligible to apply. That clarification came down over the weekend from Treasury. So the other one is, of course, sole proprietors are eligible. We'll get into the pandemic unemployment assistance. And what's important to understand is that you cannot double dip from federal money, because pandemic unemployment assistance, PPP, EIDL, you can get all of those programs, but you can't use them for the same purpose. And obviously PPP and PUA are pretty much for the same purpose, which is for your pay. And so you're going to want to make sure that you're not taking both and using them for the same purpose, because the federal government could consider that fraud. A couple other quick things about PPP is, of course, this is a program only through June 30th, 2020. We anticipate that, of course, that it will probably run out of money prior to that, and we do not know at this time if Congress intends to refund it or not. We just don't know. I'm not a member of Congress. And so I can't affect that. What we do know is, as of today, there's $140 billion left. And so we're encouraging people to apply now and assisting people to apply now to make sure they take advantage of this program. How it works is loans are 2.5 times your average monthly payroll. And so payroll is fully loaded. Next slide, I'll get into some detail about that. And then, of course, pay in excess of $100,000 is not included. So that boils down to $8,333 a month, or basically like $1,950 and change per week is what that really works out to be. And of course, the cool thing about this loan is it's forgivable. So that's what is fantastic about this. but you have to use it on what are the considered approved expenses. So that means at least 75% has to be on payroll expenses, and no more than 25% can be made, and only on these things: rent, mortgage interest, and or utility costs. So, and that has to occur, that actually dates aren't quite right. It actually has to occur within the 8-week time frame, the 8 weeks where you have the PPP loan. And I'll talk about that calendar in a little bit here when I get towards the end of talking about PPP. And again, you can have PPP, you can have EIDL, and you can have PUA. They're all federal money, so you cannot use them for the same purpose. PPP and EIDL is very easy. EIDL you use on all your other business expenses. You pay off your vendors, pay your commercial insurance, pay your equipment leases, all those types of expenses. PPP used to pay yourself, your employees, your rent. Makes perfect sense. And that's an easy way to be able to balance those two out. So what is included with payroll? So what's included with payroll is, of course, all the wages paid, including commissions, cash tips. I get a question about commissions. So if someone is W-2 and is earning commissions, like I had this question about piece rate. So what you do is you take the 2019 total that was paid in terms of commissions. These are not 1099 commissions. These are W-2 commissions. So if you have like someone you're paying W-2 commissions on, you would average those out over the year and basically turn that into a weekly amount. So you add them all up for 2019, divide by 52, multiply by 8, and that's what you're able to pay over that 8-week stretch. Same thing with cash tips. You would also include the state payroll taxes. That's pretty much SDI and SUI, but you cannot include the federal payroll taxes. It'd be any payment for any type of leave, as well as the employer portion for group health, retirement, and workers' compensation. So all of that. And of course, the owner's compensation if you are a sole proprietor. It does not include a K-1 distribution if you are an S-Corp, LLC, etc. So if you're paid via K-1, unfortunately, it is not included. That's considered a distribution and a corporate profit. It's not considered actual pay. If you're a sole proprietor, and I'll talk about this on the next slide, it is included. So that's important. Other exclusions include any employee whose principal residence is outside of the United States. So if they live in Baja, unfortunately, they cannot be included. And of course, the compensation in excess of $100,000 per year. So how does it work for sole proprietors? So pretty much that's why I'm recommending that you do a draft Schedule C. The draft Schedule C, line 31, net profit. That is really what you're going to be basing everything on. So you take that, you divide that by 12, times that by 2.5, and that's the average paid loan amount. So what you would use that also for is if you're paying yourself from the PPP loan, you take that, divide by 52, multiply by 8, and that 8-week period is what would be considered an allowed PPP self-pay expense. And so that's what is super important. So really, I know this is a lot of words that are up there. This is straight from the regulations. And so that's what's very important is you're gonna need to be able to have that. Also, just if you haven't filed your 2019 tax return, the lender probably will ask for a 1099 miscellaneous or a bank statement showing that you've received revenue during that time frame. But that's pretty straightforward in terms of that. Most of you will have a 1099, or certainly you'll have have your bank statement showing those types of deposits. So this is the application that the SBA provided the lenders. The lenders obviously have tweaked this, adapted this to their needs, but this is the information that they will collect in a variety of forms. So this isn't something you necessarily fill out, but it is something that's good to kind of know what's going to be needed. So I like to use this as an example of basically you're obviously going to talk about what type of entity you are. If you are incorporated, you're going to want to make sure you have that information. If you're using an EIN, make sure you're providing that information. It's the correct information. Then this is also where you'd be calculating kind of that payroll. So in other words, if I have 5 employees, so if my average monthly payroll is $10,000 and I have 5 employees, that would make my loan $25,000. But I also applied for an economic injury disaster loan and I received my advance, which was $5,000. In a minute, I'll talk a little bit about that. The advance was based on the number of employees you have. So that would make my PPP $20,000. That's what I would be able to receive. And so that's really how that calculation is made. Then after that, there's a lot of certifications, a lot of eligibility questions that come up. One of the key things is in terms of ownership. You do have to list all the owners of 20% or more that are the applicant. One issue that came about early on and has since mostly been resolved, pretty much 100% been resolved, is in instances of foreign ownership, but the business is a legal US business. So let's say, for example, you have one owner that's Australian, another owner that's Japanese, and they don't actually reside in the United States. But obviously the whole business operates, is managed, and has employees that reside in the United States, are all legal to work in the United States. Those still are eligible. And so you'd still need to list that information, but they still are eligible, those types of foreign owned entities. So that way their employees are able to benefit. And so the other eligibility questions are asked about basically are, kind of go into a couple of different things. Bottom line is any type of past criminal act or any sort of federal debarment. Basically, someone is certifying that all of these, under the penalty of perjury, are true and correct. So in other words, you are certifying under the penalty of perjury that this information is accurate. And that's important because, of course, there will be audits on these. We already know that all loans over $5 million will be audited. Those between $2 and $5 million most likely will be audited. Those under $2 million may or may not, especially those under $250,000, probably not, but you don't want to run into that particular risk. And so that's something you definitely want to be certified that these things are true and accurate. So in particular, a couple of things that you're certifying. Number one is, of course, that you're in operation, and that as well as basically the current economic uncertainty makes the loan request necessary. So in other words, you're certifying that you have to get this loan. So if I'm in business and I've been operating and I haven't lost any revenue, I can't apply for this PPP loan and consider it free payroll for 8 weeks. That's not something I can do. What I can do is, if I've been severely impacted by this, obviously I can. And so that's really why before you need to be documenting what the negative impact is, because you will be asked that question probably later if there was an audit situation. So that's what's very important. Also, your understanding that the loan forgiveness is basically on the payroll cost as well as those covered expenses. So many people have gotten their PPP loans. We've seen hundreds of thousands of these come through here in California. I'm seeing a ton come across that are small ones. And the small ones are the ones that I'm more concerned about, where they don't have a CPA, they don't have a bookkeeper, they don't have a CFO. And so we're giving them a lot of strict advice in terms of making sure your record keeping is very, very strict. So in particular, you're going to want, so what you're going to want to look at is, of course, some timeline. So once you get the approval from the bank has no less than 10 calendar days to provide the funding. So most of them we're seeing actually fund the loans in about somewhere between 1 and 5 business days. The day the business gets the loan is the most important day to recognize, because that's when the 8-week clock starts ticking. So if someone received a loan today on May 4th, they have 8 weeks from today for those expenses. So basically, that means you have to be able to prorate your rent, you have to prorate your utility expenses, and if that splits in terms of the payroll timeframes you have, that comes midweek or mid-payroll cycle, you're going to have to be able to prorate those as well, because it has to be within those 8 weeks from when you get the loan going forward to 8 weeks. So if they get it on a Wednesday, they get it on a Thursday, that's really when that is. And so a couple of things we're telling people to do. Number one, if possible, find a separate bank account you already have established and stick the money in there and have that be the only money. Draw it down from there very clearly, number one, for when you have payroll. Number two, for when you pay yourself, write yourself a check. Even if you've always been doing wire transfers and all that, just write yourself that check. And because you're going to want to have a super detailed records. If you normally don't pay your rent via check or anything like that, make sure you have that super clear that that's where that is coming from. So that way you're having that, your utility expenses and the like. So make sure you have super, super detailed records on that. We do have an on-demand webinar kind of going into more detail about what that looks like. And for people that get their PPP loans, we're highly recommending they take a look at that. Because the guidance right now, unfortunately, is not super clear. But what we do know is the lender is who's going to be giving the approval. The lender has the authority to request a whole lot of documentation. So we're saying be more detailed than you could ever imagine you might need to be, then be even more detailed than that again, because you do not want to run into problems with this. And so that is very, very important. So again, the 8 weeks starts the day you get the money, and the expenses have to occur within those 8 weeks. So you're going to have to prorate rent, utility, and odds are you're going to have to prorate a couple of your pay periods. So this is just a quick example. Make sure you save all those payroll reports and the like. Next one I'm going to talk about is pandemic unemployment assistance. I know that many of you, this is of interest to you because a lot of you are sole proprietors, independent contractors. So that's what pandemic unemployment assistance is for. Is this came about with the CARES Act that independent contractors as well as unemployed individuals are able to receive an additional $600 per week. It also indicated that if you are an independent contractor, you can receive unemployment insurance. And so the primary period for the $600 per week is March 29th through July 25th. And so it's primarily focused on independent contractors, sole proprietors without W-2 employees and no other W-2 income. If you have other W-2 income, you do need to have the traditional unemployment insurance, but you can indicate you do have that other income in there. I did this in my own household. I have a daughter who did some freelance work as well as worked W-2 wages on a part-time basis. And so we made sure we were able to indicate both of those, and that way she's getting her extra $600 a week plus her unemployment insurance based on that particular income. Of course, you need to apply with EDD. If you were a sole proprietor with no W-2 income and were declined because of that, because you applied prior, you do need to reapply. That opened up just 6 days ago, and this is the site. It's at the EDD. So it's edd.ca.gov/unemployment/UI_online. Basically, Google EDD pandemic unemployment assistance. But I'm of course going to be providing Ryan with this PowerPoint, and he'll have these links. So you will need to reapply. The other key sites are these that really have to frequently ask questions. They have in terms of things for both pandemic unemployment assistance, as well as talking a lot about the eligibility and what you need to apply. Highly recommend you read that because that's going to be very valuable. So a common question I still keep getting is, do I apply for PUA or PPP? Can I apply for both? Again, this money is federal money. You cannot use both. And so you need to decide which is better for you. And so that's what's very, very important. If you receive pandemic unemployment assistance, you cannot pay yourself through PPP. And so that's something that's very, very important to understand. You could, so kind of balance it out. What is your best option in looking at that and how you would necessarily want to be able to utilize both those programs. So let's see. So go on to economic injury disaster loan. So this is the other one. This is the federal program, which is the EIDL, sometimes referred to as EIDL. So we have PPP, PUA, EIDL, lots of acronyms from the SBCC, which is funded by the SBA. So we're government programs, love acronyms. And so the EIDL is the one that, of course, came out right off the bat, right on March 16th, and when the disaster was declared. And there have been over 5 million businesses that have applied for this nationwide. That's an important statistic to understand why some people aren't necessarily hearing a lot from the Small Business Administration and so forth. I'm going to address that right now up front. 5 million applications is causing obviously a delay and a backlog of these applications. That is why, even though they got refunded, they have not reopened the economic injury disaster loan portal yet, because they're trying to get through these 5 million applications and at least start having an order of processing before they allow new applications. They are opening later today or tomorrow, only for agricultural businesses because they were initially excluded. So that would be like small farms here in San Diego. And so those certainly would become eligible. And then hopefully sometime later this week or next week, it'll reopen again. And so if you've applied for the economic injury disaster loan, I'll talk about it in a little bit, is there, still a lot of patience does need to be there. And I understand patience is at a premium right now, but there's nothing else I can say. I don't work for I'm funded by the SBA, but I don't work for the SBA, and I definitely don't work in the Office of Disaster Assistance. But I do know that with, again, Stimulus 3.5, a few $1 billion for administrative expenses went to the Small Business Administration, and they've been rapidly hiring up folks to be able to process all those loans. So to circle back to the top on economic injury disaster loans. These are, of course, the loans that were eligible for up to $2 million. The interest is 3.75%. We've seen quite a few loans actually start to get fully funded. A few $100,000 here, $500,000 there for different entities. And these are highly useful because these are, yes, they're loans, but they're very good in terms with the loans for you to be able to pay your business expenses. So that would pay off your vendors, pay off your fixed, other fixed debts, pay off equipment leases, all of those types of things that you may have that would not be covered by PPP, as well as if PPP runs out, you can continue to use that money. That I know a lot of businesses are looking at that, going, okay, I'm only going to be, after 8 weeks at best, only going to be able to operate at 50% capacity, and they'll be able to use that type of money to pay their expenses. What else? So the other is collateral, common question. So what we know is anything under $25,000 is not requiring collateral. Between $25,000 and $500,000 may require collateral, and over $500,000 is requiring collateral. I'm not seeing very many loans over $500,000. I'll be honest with you. The caps pretty much are hitting around $500,000. So they're not using a lot of collateral on them. The other one is loans under $200,000 do not require a personal guarantee. $200,000 and up do require a personal guarantee. So that's something that's also important to kind of note as what's going on. And how they base these loans is they look at 6 months of your fixed expenses and give that funding to you. So that's really what it is. So you say your monthly fixed expenses for your equipment leases, your utility costs, your payroll, et cetera, is $50,000, you're going to get a loan for $300,000. That's really what these are being based on, and what we're seeing is how they're being underwritten. The other thing is these are loans directly from the U.S. federal government. So that's something that's also important to note, is these are not being done by the banks. So that's the distinction. Paycheck Protection Program comes from a lender like Wells Fargo, like Bank of America, like CDC Small Business Finance, like PayPal. Pandemic unemployment assistance, you filed for that through the state of California, through the EDD. EIDL, that is a loan directly from U.S. Small Business Administration, and this would be the application portal if and when it reopens. And so that's important to kind of distinguish between them. And they all are federal money, so you cannot use them for the same purpose. In other words, can't pay yourself with all three of them and go, hey, I paid myself for 8 weeks times 3. No, you can't do that. But you can use them in concert together to be able to maximize what you're able to then do. So that's what's important. No cost to apply. That's also something super important. All of these programs I'm talking about, there's no cost to apply. You can do this on your own with our assistance. That's what we're here to do. We provide free one-on-one business advising. I provided it to a whole bunch of realtors after my first one, and I know we got a whole bunch of folks set up with our advisors. And so, as we've seen people say, hey, for $2,500, I can help you make sure you get all the federal assistance. No. You don't need to do that. We're here. There's other entities as well that are able to assist you. So that's what's important. So those are a couple of things also I wanted to reiterate. So when the portal, if and when it reopens, this is what it would look like. This is also the one that you would have received an quote unquote up to $10,000 advance. You would have actually right here put your bank account information. You would have requested it, and you would have put your bank and your routing information. Earlier in business information, you would have indicated how many employees you have. That's how they have calculated that. I don't know why they made that decision. I didn't make that decision. I just know that's the decision they made. So if you're a sole proprietor, independent contractor, you get $1,000. If you are a company with 5 employees, you get $5,000. If you're a company with 15 employees, you get $10,000. If you're in a company with 250 employees, you get $10,000. The advance is a grant. You do need to use it on your business expenses, and they may ask to show that you used them on your business expenses. But again, understanding your business expenses could be as simple as your rent, your internet, equipment leases, to pay yourself, etc. So all of those may actually come into play. So that's a couple of key things in terms of that. Other than that, once this reopens, the business owner information is an important thing to note there, is you do need to have that for every business owner. And that would include business owners that even have 5% of the company. You need to know their social security numbers, their cell phones, their emails, as well as where their citizenship status and where their current residence is. So all of that information is stuff that you would need to know. So again, this one has been delayed because 5 million applications, and they are trying to process these as quickly as possible. I don't have access to their system. The local SBA district office does not have access directly to their system. So the best place to do is to call this number, 800-659-2955. Have your actual original application number or your social security number or your EIN. The application number is the best one for them to be able to look at. Understand they're obviously getting bombarded with calls, so the wait times are long, but this is the best way to do it. You can also email the disaster customer service. You'll get an auto reply. I don't know how frequently they're getting through those emails, but that's another way in which you can document your request for that. But we do know that there have been hundreds of thousands of the advances paid, but you don't get notification. The money just appears in your bank account. So what we're telling people is they go, I haven't got any updates. Where the first question is check your bank account, see if you've had a deposit of X thousand dollars from the U.S. Treasury. That's really how it comes up. It pops up SBA, U.S. Treasury, or something like that are the screenshots that I've seen. And so to check their bank accounts, and that will say, hey, at least they know, I know the application was received and you've got that advance. Then you will be receiving other information later. Again, they will never call and ask for social security numbers. They won't call and ask you to email them the information. They will tell you, log into the portal, then you can see what the information that we're needing, and that's where you're uploading the information. So that's also super important to recognize and understand. There's some other programs. So these are non-federal programs. These are some different ones. They're funded, they're supported in different ways. Number one is CDC Small Business Finance. Of course, they're doing a lot of PPP loans, but they also have working capital loans. We've helped hundreds of businesses already be able to access their working capital loans. And these are at excellent rates. They're usually prime +2, prime +3, and so they're very inexpensive. Also, local cities. The city of San Diego is opened and closed. We've seen many businesses both get grants as well as loans from the city of San Diego. And now the cities of Oceanside, Poway, I think San Marcos has one, and I do believe that other cities are looking at having these types of programs too. Opening hopefully by the end of this week for unincorporated areas of the county of San Diego. So that'd be places like Spring Valley, Lakeside, Bonita, etc. That are unincorporated. There will be a loan that will be processed through Acción of Southern California of between $5,000 and $50,000 for entities. This is also part of the iBank program. Some of you may have been on different webinars and heard of the iBank programs, and these are also supported by that as well, in that those loans are guaranteed for that. There's also been miscellaneous small grants that have come out. The U.S. Chamber of Commerce had one, the Better Business Bureaus had them, and so forth. So there have been different programs. Again, that's why we're recommending that people have all their finances in order, have all their documentation, because when these grants come out, usually the window is very, very, very narrow and difficult to be able to get your information in. And so it's super important you're totally prepared for that. So last but not least is just a reminder of that the Small Business Development Center, use us to help you. You can request an SBDC advisor to help you complete your application, to review your application, help you collect finances. We've been doing that a lot, helping people recognize and organize their 2019 finances to basically have a draft tax return. And help can provide it also for other capital as well. But also we're starting to shift now into a lot of the recover, reopening, and adapt. We have webinars already that are both recorded as well as upcoming. For example, we have one about online business. We have an attorney from Procopio that's going to be talking about ways in which you're able to protect both your IP, your trade secrets, really your online business assets, and what you can do. We're going to be having workshops and webinars on human resources and then updates you're going to need to do for your policies, your procedures, your workplace safety. We'll also have some that are industry specific. The first ones that'll roll out next week are actually for childcare businesses, because we recognize that without childcare, it's really hard to open up any other business. And we'll be having programs for food businesses, construction, and the like. So all of those types of things will be coming out as well. So see, we've got some questions in there. So feel free to be able to put some Q&A. I'm going to kind of go through these and be able to answer some of them as well. And so the first one is my business is a sub S corp. I received the advance, but don't know what happens next. So that would be the advance you receive for EIDL. What happens next is, well, you wait. And so understand the advances for EIDL is not for your PPP loan. A PPP is a single funding that you would apply for from a bank. But if you received your EIDL, use that for whatever your miscellaneous business expenses are. And so that's one thing you'd want to be able to do. Next one said, thank you, you're welcome. Next one is, as agents, many of us don't have monthly income. I had no income January to now, had a large pipeline of business that was to begin early March. All those clients are waiting now. If I can't show income for the first 3 months, it's not gonna make me ineligible. Show the income not necessarily just for the first 3 months, but also for all of 2019. So take a look at your, that's why, again, super recommend 2019, show that income. And what they really do require in order to be eligible for PUA and be eligible for any of those different types of benefits is that you do need to be able to show some type of revenue or income that you've had. So those are the types of things as well. The next is, will the lender have those equations as well? Yes, they're doing that. Some of them are asking for just basically give me your 2019 payroll, and they're calculating it, or those types of things. So what you're going to want to do, again, I'll also email this out, is so what the equations really are that you're looking at is you're going to want to look at the payroll. So your wages paid, state payroll taxes, add all of that for that time frame, divide that by 13. The other one is you're going to want to have a draft to Schedule C. That's important. So you have your line 31, your net profit amount. That's what's really going to be able to show you the information for yourself, for your own income. And then let's see. As an agent, I'm considered an independent contractor, but I believe I'm also considered a sole proprietor. Independent contractor, sole proprietor, it's all the same thing. So what you would do is, it's how you file your taxes. If you file a Schedule C, you're an independent contractor. If you file a Schedule K, get a K1, or you actually have incorporation documents, you're incorporated. If you don't have incorporation documents, you're not incorporated. That's really what it is. And then you would be a sole proprietor. So that's what you'd want to do. Another one is I'm an S Corp with 1 employee. So do I apply for PPP and also EDD PUA? As an S Corp, you're not eligible for PUA. Unfortunately, S Corps, for people that receive K1 distributions, there aren't good programs for you. So unfortunately, that's what, if you haven't been paying yourself as a W-2 employee and you're an S Corp, there really isn't anything that's out there that other than EIDL and some of these other working capital loans. And so what you're going to want to do is apply for PPP, be able to pay that employee. And basically, if you can add yourself as a W-2 employee to that and pay yourself through that for part of what you would get and be able to maximize the PPP. But again, the PPP is only going to be the payroll for 2.5 months of that for that 1 employee. But again, 2.5 months is greater than 8 weeks. And so that remainder you can use to pay yourself as a W-2 employee. So that's what you'd want to be able to do. For PUA as an S Corp, there's no option. You have to be you cannot be incorporated and be able to apply for PUA. What do you do if you apply for both unemployment and PPP? You certified a few weeks, then got approved for PPP on Friday. Can you cancel the unemployment and move forward with the PPP? So it's a good question. So obviously, again, looking at those particular dates. So I'm going to go actually to the PUA dates. So it's March 29th to July 25th. So basically what you would do is you would certify saying the next 8 weeks I'm receiving my regular pay. So that's what you'd be certifying and how you pay yourself through the PPP. You're gonna have to want to work. I don't work for the EDD. I don't, and so I'm saying this is what you'd want to do, because it's just the same as if you were offered a job. You're on unemployment insurance and you're offered a job. Obviously, you're no longer eligible for unemployment insurance. And so the same sort of thing is you'd be able to have that PUA for those weeks prior, then you'd have the PPP for the next 8 weeks. And that's really what it would be. So you'd get the back pay for March 29th to say April 28th for PUA, and then your PPP going forward. So again, if you've got approved, you haven't got the disbursement. So that's really what you'd want to be able to do. So you'd basically certify that as of the date you get the disbursement, no longer are eligible or certifying you're ineligible or you're getting gainful employment or gainful income, and so you don't get the PUA. That's what you're going to want to do. So again, that's why these dates are very, very important, and make sure that you're not double dipping during those time periods. Next question is, I have an S Corp that pays me a W-2 salary. Do I apply for regular unemployment, or is there something under PUA? You would actually apply for regular unemployment. You can either do regular unemployment, because PUA would automatically kick in that instance, or you would be able to use PPP and pay yourself that W-2 salary. So that's an either or situation. So the next one is, my business is not the essential business and currently closed. Assume it will reopen on 7/1/20, which means I will not have a payroll until after 7/20. Right, so this is important to understand the intent of the Paycheck Protection. It's not to pay your employees to work. It's pay your employees as though they were working. That's the intent of the program. You ask any member of Congress, they'll tell you the exact same thing. I know, I've asked them. And so so if you're not open, it doesn't matter. Let's say I'm a gym. We know gyms aren't going to reopen. All right, you have 8 weeks that you're able to pay your employees as though they were working. If you have reduced, like you're a restaurant, so it's all of those same things. So to pay your employees as though they were working. If they worked regularly 30 hours a week and were paid $1,000 a week, you pay them $8,000 during that 8-week time frame. That's what you're doing. So it assumes they're not working, because if they're working, that means you have revenue. That means you're not eligible for PPP. So the intent of this is for you to retain your employees and the employees to not have to be working, because they can't work because the business is closed. So that's super, super important. It's a common misunderstanding, because it's hard to wrap your head around. But think of it, though, that this is government paid sick leave, that the whole country is sick. You're paying them as though they're on sick leave and they're not working. So that's the best way to kind of think about it from that particular ways. Next one is, I'm an S Corp. I have employees who are making more on PUA. I also got a PPP loan last Friday. So this is a tricky balance. It's a very tricky question to understand. So you will not be penalized if they choose not to come back. That is clear. But you are reoffering them employment. So this is a relationship situation that you have between yourself and your employees. So when you are no longer an employee, well, basically an individual who's on unemployment insurance, and PUA is unemployment insurance, if they are offered a job, if they're reoffered the job for which they were laid off for, they are no longer eligible for unemployment insurance. So how you handle that between you and your employees, I can't tell you. What I can tell you is that's how that's looked at. If the employee chooses not to come back, that will not negatively impact you for your PPP. So you would want to document that. So what I'm recommending is, as soon as you get that loan approval, all of the employees, you work with them. How you work with them is up to you. I can't get into your exact employer-employee relationship, but you basically are saying, I will pay you as though you're working for the next 8 weeks, and basically you're fully rehired. So what obviously that does is, hopefully within the next 8 weeks, because we're going to be pretty close to that July 1st date that the previous person said, and hopefully there'll be some level of operations of most businesses by then, they'll still have their job. Otherwise, if they don't retake that job, most likely you're going to be looking for somebody else to fill that role. And so that's a delicate balance you're going to be having to work. So remember, the intent is that you're paying them as though they were working. Theoretically, that would cover their weekly, monthly, daily expenses, because that was their job. And if they're saying, I would rather stay on PUA, but you offer them a job and you really want them to stay working for you, and you let the state government know about that, they will no longer be eligible for PUA. So that's the delicate balance that you definitely need to kind of balance. So again, the intent of PPP is that you, the small business owner, can pay your employees as though they were working, even though the business is not open. So even if they're not working. So that's really what the intent of it is to do. So you can retain your employees, and the federal government can reduce the unemployment rate. Absolutely. But more importantly, so you can retain your employees. And so that way, when the go button gets pressed and you can reopen your business, you have the exact same employees ready to go. That's what's very important. Next question is the $1,000 disaster loan assistance grant count against PUA? No, it does not. As a business owner, if I had not paid myself via W-2, can I start paying myself to use the PPP fund? You would have to have shown payroll before. It was kind of would have to be kind of a balance, depending on how your business structure was. But yes, you can increase the payroll amount to pay yourself from there, but you cannot have a greater than 25% change one direction or the other. I have a general partnership, receive PPP. Do I pay myself with checks and put guaranteed payment on the memo line? Yes, or I wouldn't necessarily call it guaranteed payment. I put PPP payment or whatever that is, or however you particularly call that. But the more documentation you have, the better. Last question we have is if I'm an independent contractor. Oh, not the last one. So if I'm an independent contractor that showed a loss on my 2019 income taxes, would I qualify for PPP or PUA? Probably not. You didn't have revenue. I'll be honest with you. If you don't have revenue, you're not qualifying for these. These are revenue replacements. They are not free money. They're revenue replacements. That's what this is intended to be. So if you do not have revenue, then you are not eligible for these programs. That's just the way in which this works. The next one is, what if your employee comes back on payroll and they were on PUA, now they're getting paid, then for whatever reason we don't keep our doors open, can they get PUA? Yes, they can refile for unemployment insurance. If you, let's say for example, the business permanently closes, they would still be re-eligible for unemployment insurance. The next one is, I'm not a W-2 that has run out of benefits for this year. Do I still qualify for unemployment assistance? Not sure I understand the question. If you're still getting paid, you don't qualify. And so not really sure. I don't think I really understood the question. The next one is on the EDD. It says not get, oh, there he responded more, not getting paid. So if you're not getting paid and you were a W-2 employee, if you were getting paid prior to this, you were laid off, clearly you're eligible, or you laid yourself off because you can't pay yourself. So let's say I'm an S Corp and I pay myself as a W-2 wage, and in essence, I've laid myself off, I would be eligible because I wouldn't be doing that. The next is on the EDD. The from says it is an error when I marked affected by COVID and X error. That you'd have to call the EDD. That's a deep in the weeds questions, Michelle Peters, and I don't have enough knowledge as to exactly how their program works for that. So I do know that they're answering calls for a long time and all of that. PUA takes Schedule C income, correct? That's what it's based on. It is for that because the passive Schedule E income does not take PUA. So that's the way in which that works. Especially because PUA is based on that, since you don't pay on Schedule E passive income, you don't pay payroll taxes. That's why it's not included, since you're not paying payroll taxes on Schedule E passive income. What's the process for asking forgiveness for PPP going to be? You will document like crazy, work with your lender. That's in short what it's going to be. Your lender will have a process for requesting that forgiveness. And so they will have documentation for that. But right now, over document, like I had before. What you're going to want to make sure you do is have all of that type of information. I highly recommend you watch that recorded video that we have. I think I've got all of them answered. Let's see. So again, I appreciate everybody. We're almost out of time anyway. So here's our website, SDIV-SBDC.org. Really should say May 4th because it's May the 4th, and May the 4th be with you. But we're happy to be able to assist you. We've assisted a number of people from the first webinar. You go there, you click Request Counseling, and you sign up for our service, and that's really how it's going to be. The question is, is the PPP 100% forgiven? If you can show that at least 75% of it was spent on eligible payroll expenses and no more than 25% on rent, utilities, or mortgage interest, it can be forgiven through your lender. And so that's really how that would be able to work. That was the last question we were able to see. So again, Ryan, I think we've got everything. I'll be providing you, Ryan, the certainly all of the slides, and he'll be able to provide that information out. Thanks
Andy,
all.
thank you again.